And I know times like this, you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Hello everyone, this is Ahmed Chawi by Liquidity Club. Today is Sunday, the 17th of September 2023. We'll be doing the weekly market review. So let's get started. Starting with the DXY, we have the weekly chart here. Last week in the weekly review, I mentioned the consequent encouragement of this premium wick that we might do to this buy-side liquidity as means of drawing liquidity to the buy-side liquidity. Now, we perfectly did that. As a result, we created a fair value gap. The next target would be this buy-side liquidity. I want you to pay very close attention to the bullish breaker that I have highlighted last week. So you can refer back to the last week's review and you can see that I've mentioned that this is a bullish breaker because we have a low, high, lower low, and now higher high. So the highest up close candle would be influential going forward. And in fact, we can see how price created the low of the week. I want you to go to your charts and see this by yourself. Don't take my words for granted. Don't take my words. Just go to your charts and you will see it by yourself. The high of this candle is the low of this week of this candle. So the high is at the 104.419. The low of this week's candle is the same value. This is not randomness. This is algorithmic price action. This is precision. As I've mentioned, in September, we're gonna be seeing the precision that I've mentioned, and we in fact did. This is one of the things that tells you that we are in precision environment or precision conditions. And we in fact reached to the consequent encouragement of this premium wick. And the next draw would be, for me, this buy-side liquidity, which comes at this value, 105.883. Going to the daily chart, as you can see, this is a zoomed out a little bit version of it. This is the buy-side liquidity, and this is the consequent encouragement of the premium wick. You can notice that the premium wick, we have a fair volume imbalance here, and we filled that volume imbalance. The consequent encouragement, this is the weekly consequent encouragement, which is this value here. I want to see it treated as support that sends price higher if we ever reach to this consequent encouragement. But if we did, I want to see it show us the signature in price action that it wants to show us support that can send price higher. We have fair value gap, price retraced into the fair value gap and to the high of the bullish breaker. This is a nested BD array from the higher time frame to the lower time frame, from the weekly time frame to the daily time frame. And you can see how we retraced on Monday, created the low of the week. Tuesday was a bit of a mohawk, it's a doji. It was indecisive, and then Wednesday, Thursday, and Friday we reached to the drawn liquidity, the initial drawn liquidity, and this would be the terminus, which is the buy-side liquidity, which is at this value. Very, very close attention to how we reached to the low. We created the low at the bullish breaker, and then we reversed. This is not random. I've mentioned it, it's not random. And some people come to you and tell you that this is buying and selling pressure. All right, so what I'm expecting, this is going forward, this is a zoomed in version. You can see that going forward, we have this down close candle, which is a bullish order block inside this fair value gap. It's there, but I haven't highlighted it on this chart to keep it clean. Going to the zoomed in chart here, this is the same DXY, but it's zoomed in. So it's just showing from here to here. I'm not showing this side of price action. It's a bit more zoomed in version. So we have a bullish order block here, which is this down close candle, which is reaching to the bullish breaker, which is also reaching inside this fair value gap, consequent encouragement. And it also has created the weekly chart. You can see fair value gap here. So there are many influences here, and then we rallied up higher. This down close candle would be a bullish order block. We have a fair value gap here. So if price wants to ever retrace, I'll be looking. You can also notice that the consequent encouragement, the weekly consequent encouragement, comes at the approximately at the mean threshold of this bullish order block. So I really want to see the consequent encouragement as the last defense line. So if we break this line, we might be able to see lower prices. This low and this fair value gap that I haven't highlighted here. You can go to your chart and you can highlight it. So, but anyway, I'm expecting the fair value gap and the bullish order block to show us a very strong reaction going to the next week that sends price higher to the buy side liquidity, which is the terminus. Otherwise, if we lose the consequent encouragement level, which is approximately the mean threshold of this bullish order block, and we close below it on the daily chart, I will have to be looking for lower prices, this low, and this fair value gap. Otherwise, I'm holding my bias bullish on the XY. Going to the ES. If you've noticed that I've switched to the December's contract because the volume has been transitioned from September's contract to December contract within last week trading. So I'd say during Tuesday and Wednesday, between this time period of last week, we've witnessed the volume transition from September's contract. I might be able to attach the chart here so you can see it, but yeah, the volume is now higher on December's contract compared to the September's contract. So if that's the case, you switch to the highest volume month. Anyway, so last week we retraced approximately to the weekly inversion fair value gap and we traded lower. I want to see the weekly consequent encouragement, which is approximately at the weekly inversion fair value gap low, to offer us and provide us means of resistance that sends price lower. I want to see price preferably reaching to this sell side liquidity. I've mentioned my draw liquidities. This sell side liquidity is low with the weekly fair value gap that is just below it. So I'm still holding the same bias. I'm expecting lower prices, and I might be wrong, but this is what I'm favoring. Gun to my head, I'll be favoring the run towards this sell side liquidity, because we spent so much time here in premium regarding from this high to this low. We spent much time here at premium. We retraced to the weekly fair value gap, and we just spent much time here. The weekly inversion fair value gap, the bodies are respecting it. It's a signature for me to expect price that is trading lower. So it would be logical to see price repricing back to discount, which is this low, this rejection block. We have a rejection block here, the low, and the weekly fair value gap. Going to the daily chart, as you can see, I've already highlighted and I've mentioned what have we been doing here. The daily fair value gap, how we traded the daily fair value gap, and we respected the low of it, and we started trading lower. Notice the bodies are respecting the weekly inversion fair value gap here. We traded lower here. Notice that last week we filled this fair value gap, reached to this small inefficiency that I've mentioned last week, and you can notice the bodies are respecting this inefficiency. The wicks here are doing the damage. You can see how we opened, took this buy side liquidity, did more damage, trapped more retail into going long, and then we just traded lower, taking this sell side liquidity. So this is how price moves. This is the PO3, how price opens here, takes the buy side liquidity, and then trade lower to close there. So the next target would be for me this fair value gap with the sell side liquidity. So it's very enticing for these relative equal lows and this low with the fair value gap here. I really want to see price trade lower to this sell side liquidity and to this fair value gap. After we trade to this fair value gap, I want to see, do we accelerate towards the downside, or do we just reverse after filling this fair value gap? So until then, I'm not sure what the next move is gonna be, but my expected move, or what I'm favoring here, is a run below this low and towards this fill favor gap. If we accelerate through it and we close below it, this is the daily chart. If we close below it, we might treat this favor gap as support or resistance, excuse me, that can send price to my higher time frame drawn liquidity, which is the sell side liquidity on the weekly time frame, which is this low here, and the weekly fair value gap, which is right there. Until then, I'm expecting the low of this daily fair value gap to act as resistance. Why? Because there's also a potential fair value gap here. When we open next week, tomorrow, Monday, we will be having a potential fair value gap. If we close on Monday below, we might have a potential fair value gap. So it's expected to see price retrace to close this potential inefficiency and to reach to the daily fair value gap low that can send price lower towards the sell side liquidity and to this fair value gap. So the retracement towards filling this potential inefficiency and towards the low of this daily fair value gap will engineer and facilitate more liquidity that will be utilized to send price lower towards this sell side liquidity, which comes at 4,483 and a quarter, and the fair value gap that resides just below it. So that's my outlook for ES. Going to the NQ, also known as the NASDAQ. Here we have the weekly chart. As you can see, if you compare and contrast the NASDAQ with ES, NASDAQ has went all the way up, reaching to the weekly inversion fair value gap high and to the rejection block. Whereas ES has just reached to the consequent encroachment of that weekly inversion fair value gap. So what does that tell us? It tells us that ES is heavier towards the downside when compared to the NQ. NQ is a bit giving us a deeper retracement than ES. ES just in a hurry to reach lower. So I'm also expecting the consequent encroachment of last week's candle, the premium wick, the consequent encroachment of the premium wick to act as resistance that can send price lower. Going to the daily chart, as you can see here, how we traded to the high of the weekly inversion fair value gap and we traded lower. We have a fair value gap here. I'm expecting this fair value gap, once we trade below it, to treat it as an inversion fair value gap, and the low of that inversion to be an inversion fair value gap, the low of it to be treated as resistance that can send price lower towards the sell side liquidity. So this is what I'm expecting. I'm expecting a kind of retracement towards the upside, maybe to fill some of that inefficiency, the potential inefficiency that might be forming after we close on Monday and we open on Tuesday. So on Monday we might retrace to close some of that inefficiency that might occur and then trade lower to close below this low. Once we trade and close below the low of the fair value gap, which is the high of this candle, which is the low of the fair value gap, once we close below it, this fair value gap will be termed as an inversion fair value gap, and we might be able to anticipate and expect price to treat the low of that inversion fair value gap as resistance that potentially sends price lower towards this sell side liquidity, which is previous month low, and towards this sell side liquidity and the weekly fair value gap. So this is what I'm expecting for the upcoming trading on the NASDAQ. Going to the Dow, here we have the weekly chart. Last week, we retraced all the way up to the weekly inversion fair value gap consequent encroachment and the weekly consequent encroachment of this premium wick, which has a retracement to the bearish order block, and then we traded lower. Now, what I'm expecting for the next week, now we can see that we have a bullish order block here, so this is why price is just being indecisive between two sides. So it's just inside the range, it's consolidating because it's inside the range. What I'm favoring, gun to my head, is that we close and trade below the consequent encroachment of this discount wick and trade lower. Once we close below this sell side liquidity, which is the 34,637, I'll be looking for the rest of these sell side liquidity to be attacked. Now you might be asking me, why this low, or why this number, or why this sell side liquidity to be specific? Because once we close below the sell side liquidity, it is overlapping with the mean threshold of this bullish order block, and once we close below the mean threshold of the bullish order block, it means that it is no more valid. Because if you go by yourself and you can look at the charts as an assignment for you, if you measure the mean threshold of this bullish order block, you would see that it's very approximate to this sell side liquidity. So if we close below the sell side liquidity, I'll be expecting the previous month low and this sell side to be attacked next. So I'm expecting the consequent encroachment of this premium wick to act as resistance. Although I don't want to see price trade up to the consequent encroachment, maybe the fair value gap low or the weekly inversion fair value gap low can be sufficient to send price lower towards the sell liquidity. But the main point here is that I want to see a closing on closing basis that price close below this level, which is the 34,637. Going to the daily chart, as you can see here, the weekly consequent encroachment is approximately the rejection block, and we've seen a good reaction at it and price retraced lower, taking this as liquidity. Now next week I'm expecting the low of the fair value gap, the weekly fair value gap, and the low of the inversion fair value gap to treat or offer us some resistance that sends price lower towards the sell side liquidity. And I've mentioned my notes about this sell side liquidity, the main point about this sell side liquidity, which is the 34,637. So that's pretty much it for the Dow. Going to the Euro USD, as I've mentioned at the beginning of this weekly review, if you rewind the video, you would see that DXY has reached the buy side liquidity to the wick consequent encroachment, and I'm still expecting the buy side liquidity to be reached. And at the meantime, Euro USD has reached the sell side liquidity that I've been calling out for weeks in advance. Since 2-3 weeks ago, or maybe a month ago, I've mentioned that I want to see price reach to the sell side liquidity, and we did that last week. So this week, the low was at 1.06319. This is an institution level. The low here comes at 1.06351. We reached to the sell side liquidity perfectly, as I've been calling for months in advance. For weeks, I've been calling this level to be reached. So this is not randomness. This is not hindsight. This is not market replay. I cannot edit the video once they're out. No, I cannot do that. So I've been calling levels in advance. Anyway, for next week, I'm expecting the consequent encroachment of this candle to offer us some resistance. If it did offer us some resistance, I'll be looking for a continuation towards the wick consequent encroachment. If the consequent encroachment of this premium wick provide us with resistance, I'll be looking for a continuation towards the sell side liquidity, which is the wick consequent encroachment of this discount wick and the sell side liquidity, and these are the levels as mentioned. Going to the daily chart, as you can see, price has, as I've mentioned last week, there was a fair value gap here and there was a bearish propulsion block. We did a perfect retracement, as I've mentioned. Please just don't take my words for it, or don't think that I've been calling levels or in market replay or it's an edited video. You can go to the 3rd of September 2023 weekly review. It's on my channel. You can go to the playlist and you can watch it. On the Euro USD on the daily chart, I've mentioned that we had a fair value gap here with a bearish propulsion block. I wanted to see price trade higher to fill some of the fair value gap, and if it really wants to accumulate more positions at the bearish propulsion block and then trade lower. And as a result, today, after we see it, Euro USD has traded higher, filled and left a very small inefficiency of this fair value gap, so it didn't completely fill it. Keep that in mind. And then it traded lower, reaching to the sell side liquidity. So now let's zoom in a little bit here. What I'm expecting for the next week. This is how we retraced to the fair value gap and then we sold off. We have this 2 consecutive down up close candle, which are the bearish order block. This is a bearish order block, which is approximately at the consequent encroachment of this fair value gap. So I'll be expecting, if price wants to continue trading lower, I'll be expecting the fair value gap, a retracement towards this fair value gap and towards the bearish order block that can send price lower towards the sell side liquidity, the weak consequent encroachment and the sell side liquidity. And the last defensive line would be the weekly consequent encroachment. Now, I know it sounds that it's cherry picked, or that I'm just cherry picking the best trades or the best setups or whatever. The weekly consequent encroachment is approximately at the mean threshold of this bearish order block. So once we close above it on the daily chart, I'll be expecting a run towards this buy side liquidity and this fair value gap right there. Otherwise, if these levels, the bearish order block, the fair value gap, wicks can reach to the weekly consequent encroachment. But I don't want to see anybody's closing above it. So wicks can wick through it to do the damage. Remember, wicks do the damage, bodies tell the story. So I'll be expecting the bodies just to be respecting this fair value gap with the bearish order block, and the wicks perhaps reaching to the weekly consequent encroachment to accumulate more positions, so smart money can sell at higher prices and to trap more retail and to trap more breakout artists into going long, which they are going to be utilized as buy stops, which are going to be sold by smart money so they can buy them off back at the lows, at this buy side liquidity, the weak consequent encroachment, and the other sell side liquidity. Going to the pound USD, also known as the cable, you can notice how we retraced a little bit to the low, which is the sell side liquidity previous month low, and we started trading lower. So I'm still expecting a run towards the sell side liquidity, and we might see some resistance at the premium week consequent encroachment. So this is what I'm expecting for the pound. Going to the daily chart, as you can see here, now on this pair, on pound, you can see that pound has retraced and filled completely this fair value gap, which is on the daily chart. When you compare it to the Euro USD, if you rewind the video, you can see that on the Euro USD, or also known as the fiber, it didn't completely fill this fair value gap. There was a small inefficiency that was not being filled. But here on the pound, also known as the cable, price has filled it completely and traded lower. It was very close from reaching to the sell side liquidity that I've already mentioned in the last weekly review, and we're gonna be reaching to it, that's what I'm expecting, and towards the sell side liquidity. You can also notice how the rejection block, the weekly consequent encroachment, which is on from the weekly chart, it's nested down from the weekly chart to the daily chart. It's approximately at the rejection block. So I'll be expecting price to be heavily trading lower towards the sell side liquidity. So that's pretty much it for the pound. Now there are some points I want to address, and they are: next week we have FOMC on the 20th of September, which is Wednesday. So it's better for you to be more cautious and to be extremely careful on how you do the trades, and it's preferably better to understand how FOMC works, and it's basically a two move pattern. So it's a two moves pattern, that the first move is usually the move that traps retail, and the next move would be the real move, which is after 2:30 to 2:45 p.m. New York time. I also want to remind you that I'm doing this to prove that I'm capable of anticipating future moves in the markets. I just want you to sit back, relax, and watch what I'm capable of doing. That's pretty much it for this weekly review. I hope you gleaned and learned something from this. And until I talk to you next time, be safe. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.